Emirates and ICI Bank and various other sectors, and is now a well-renowned coach in the field. So he has a lot to add to this conversation and teaches lots of people all about this subject that we'll be talking around. And we have Ronald, who's a senior risk and regulatory compliance transformation specialist with over 20 years experience working in Australia, Europe and US for some big firms like InSync and Bank of Queensland and many more that he's assisted clients and worked along the commercial and compliance solutions. So welcome, guys.
Thank you.
So just a little intro about me and a little bit intro about the AML Watcher and where we're at. So I'm Mark Bain. I am the CEO of the KYB. KYB does exactly what it says on the tin, a little bit like the title of AMLWatcher.com. It watches the AML sanctions and PEPs. So just to give you a little intro about AML Watcher and our ethos and our background and narrative on where we see the market coming. We are trying to revolutionize the market in as much as making this a commodity play, making it really user-eccentric and easy to make them decisions. We're backed by over 200 sanctions regimes, both globally, commercially, and globally, domestic and international regulations, over 1,300 watch lists and multi-tier PEPs, screening leaked databases and corruption indexes, sourced directly from the official channels of over 60,000 data sources. So meeting a real diverse screening requirements. So I'd like to talk about the subject of what we're raising here, and it's based on a recent document from CoinDesk, in as much as the ineffective AML regime. What can we do about it? So I think that's the sort of subject we're going to be talking around. They controversially talked within that document around, is it worth doing it at all if we're not doing it correctly? So I think we've probably got some real hot talking points about that. And I can say to you that to the audience, if you've got questions, please add them in, and we'll grab them either during if they're really hot topics, or we'll grab them at the end if it's kind of in the mix. So moving on. So let's look at a few questions that we've got there. So sort of thought-provoking questions, really. So if we can jump into it, I think the question here is, why does the burden of compliance fall solely on the commercial sector? We see that often, and other sectors are not screening the risk. There's a few changes in some of the regulations recently, and making them AML rules ineffective. So, Girish, would you like to add a little comment to that?
Yeah, sure. Why not? Working in the financial industry, I think banking or financial industry is the backbone of, whenever money is involved, you think of a bank. And I think that it's the fundamental requirement of a bank is to keep the money safe of the customer. And looking at the way the banking system has been working over centuries now, the customer, if they want to keep their money safe, that's where the bank comes into picture. So having the compliance, which is the fundamental requirement of a financial sector, is required because the money has to be kept safe. And the bank also needs to keep in mind that it is the responsibility of them to have the trust of the customers. Whereas the other industries, they don't have that kind of a responsibility towards the customers. But the fraud, in case, if you look at the fraud things which has been happening, major frauds are directly or indirectly happening in the financial industries. Well, not that the frauds are not happening in the financial industries, but the frauds now are linked to banks or linked to financial industries. So the primary responsibility of the banking staff is to keep their customers safe and to perform the due diligence, see that everything goes on right. So I believe that the burden definitely falls on the financial sector more than the other industries. And currently, if you look at it, the trends are more in financial industry because money laundering and terrorist financing happening is more linked to the bank rather than other industries. I'm not saying that other industries are not involved, but it is linked more towards the bank. So it is more burden comes on the financial industry rather than the other industries. Now, when screening comes, we have to identify a right customer, because products are not done for a wrong reason. Every product is done for a right reason. Every product, anything for that matter, is done for a good reason. But the customer who's using the product. That is where we need to identify, and it's the fundamental requirement of us, that is the working in financial industry. They have to keep in mind that what kind of customers they are onboarding, what kind of customers are doing the transactions, how the customer actually uses the financial products while they're doing the transactions, whether they're doing it right or wrong. That is where it is the completely responsibility of the financial sectors, and it is completely responsible. Rather more responsible. Financial industries are more responsible towards doing the compliance systems right. This is what I believe.
And Ronald, your thought on that, in as much as, do you think other sectors not screening makes it ineffective? I mean, clearly, you're.
It's a tough one, right? So the FATF recommendations talk about the inclusion of what they call DNFBP, so designated non-financial
businesses and professions.
Yeah, businesses and professions. So we are talking about primarily around lawyers, we're talking about accountants, we're talking about real estate. So within Australia, we're probably waiting a long time for regulation to change for DNFBP to fall under the AML CTF regulation. Currently, it's gaming, gambling, it's financial services, and finally, it's bullion dealers. But these are considered the gatekeeping, sort of roles where you're seeing accountants or legal professionals able to create distancing, shell companies, those sort of structures. The other one is high value dealers that fall into that. You can buy a luxury $40,000 bath, but did it cost $40,000 or did it cost $20,000? There's trade-based money laundering coming through that as a consequence. Gold, diamonds, and so forth follow very quickly onto the back of that. So, in conclusion, banks are whinging that they feel that the burden of the entire AML system is falling upon them as a consequence.
Yeah, I think so. So I suppose, the other is the way in which it gets done as well. There's been lots of fines and issues going on, seems like for a long time, but that seems to be getting more and more tighter now. And I suppose the question really then is, do you think just ticking a box, the financial sector is just tick the box, right, we've done that, done, okay, this is the structure? Or do you think actually having some kind of technology behind it or some kind of thought process behind it, there's a few subjects I'll come on to later about AI and about machine learning, but in this case we often see the tick box, well, they've done it but they still got fined. So what's your thoughts on the tick box versus actual people looking at it?
All right, if I can take this question, I think a smart financial institution should actually use compliance, or rather the KYC, in a smarter way. The reason why I'm saying is that when you're onboarding a customer, you need to onboard a good customer. You need to understand the needs of the customer. You need to build a strong, trusted relationship with the customer. And more stronger your trusted relationship is built, the stickiness of the customer is there, and that customer will be there for life with you. And then you can actually, I'm just telling you, how compliance or AML or KYC actually plays a very important role for the first line of defense also. Okay, the first line of defense should not think that it is just a tick in the box by doing a KYC, because that's what normally people think. But if they look at it in a different way, okay, why am I doing a KYC? I am doing a KYC because I need to understand the customer's profile. I need to know what is he doing. Is he going to play golf? Is he traveling? Is he building a house? Is he going to having a family, or sending his son to a foreign location for his higher studies? If I learn all that, then I can actually start giving him the best of the products. And KYC is not just tick in the box. It's actually to know your customer, and more you know your customer, you can actually sell better. And that is what the the first line of defense need to think, that they need to start looking at it in a very different way, that, okay, if I do KYC, then I can sell better. That is what I think. And a smart frontline team has to think in that sense. This is my 2 bits.
Yeah. And Ronald, I mean, I suppose my immediate question to that back to you there is, that comes at a cost. Because
Absolutely.
it's a cost. Yeah. Versus some kind of algorithm or some kind of AI that does some of that for you.
Yeah, look, there's 2 parts to this. I very much, there's a differentiation between AML as anti-money laundering versus money laundering risk. Money laundering risk, AML risk. AML risk is about compliance, making sure those things are happening, making sure you're not going to get in trouble, your firm's protected, all those things. Money laundering risk is about preventing that stuff from happening in the first place. The AML regime is very much geared towards after the fact and reporting what has occurred within that. Tools and so forth are now, RegTech's actually helping you actually prevent those things. So there's a part of this which is about that preventative versus detective control. And, fundamentally, the checkbox view is, in many cases where risk is not seen as an enabler, it's actually seen as, I've got to do this. Therefore, that particular business is much more focused on AML as opposed to AML risk as opposed to ML risk.
Yeah, good point. So I think, if you stick to that rule-based of AML kind of compliance, does that lead to failure in due diligence? I mean, it's kind of like this tick box thing. So if you just stick into that rule-based, do you think actually you're failing in that sense?
Yeah, go ahead.
So sorry. So I think on that front, if you talk about sort of the evolution of how let's take transaction monitoring as an example. The evolution of transaction monitoring started out very crudely as the 3 V's: volume, value, velocity. Still present, still valid, still good. Then moving on to collecting more information around the customer, sort of saying, what else can I add in? Is a transactional precedent that I can use within that? Then adding in derived information around the customer, a risk profile, and so forth. And as you progress through that, the more and more mature you get. And now we're having AI and ML are being added on to the end of this process to try and find connections over and above what you've seen. So fundamentally, rule-based compliance is appropriate for your capabilities and how you attempt to solve for that risk. And I think rule-based compliance is okay if you understand what your risks are and how you need to apply them. Using a spreadsheet to manage your compliance or your AML is perfectly reasonable, providing you, of course, you understand your risks and you understand how to apply them.
Yeah. Would you concur to that, Girish?
Absolutely. I definitely would concur to that. I mean, I would agree with what Ronald mentioned. And sticking just to rule-based compliance would be a disaster. And relying solely on that would be devastating for the financial institution. We have to apply a risk-based approach, and we may want to. We cannot use the same yardstick to all our customers, and we have to use different yardsticks because the 4 risks which are there, whether it is customer risk, delivery channel risk, product risk, or product risk, or jurisdiction risk, whichever risk is there. So when you're looking at it, we have to actually apply it. Whether the customer comes from this segment of the society or maybe is from this jurisdictions, we have to do that. Otherwise, it will definitely not work. Yes.
Yeah. I mean, it's interesting because my next question sort of ties into that slightly about adverse media. And of course, I personally have an issue with the potential adverse media because you could be talking about deep fake. For example, it's a very hot topic at the moment. I know slightly off piece to this, but by adding adverse screening into the AML kind of watch list, do you think that becomes more effective, or do you think it becomes a distraction?
This is a tough one, actually.
Yeah.
And topical, as you say. So, look, adverse media is great to augment what you currently have in terms of screening, right? I think it gives you, let's say you're doing a name screen and you get a potential match. I won't say a match, you get a potential match. The first easiest thing you're likely to do is reach for Google. Can you actually tell me more about what it is? Then the real questions come in to say, how many hits am I going to go down to be convinced that this is or isn't right? How many pages am I going to go through to sort of get to that conclusion? If you're provided with some of those gold standard tools that do the adverse media search for you, come back with the different topics and views, and then apply that back, how do you make sense of what's useful within that? And at what point do you stop? That is then putting a lot of pressure, or well, not pressure, but you're putting the focus then on business process and your business process rules to say how much is enough and where do you stop? I mean, I could sit there on a complex customer with multi-entity structures and keep going, for a long time. One of our listed businesses here in Australia, ANZ, one of the big four banks, a huge bank. If you did a search of what are the companies that underpin that, and the company structuring of that, it's 200 that go underneath there straight away without looking into their ownerships. And then, you've got to draw a line as to what your rules say and where you actually end. So it does help, but you've got to be clear as to what that means. And if the second person comes along, will they come up with the same result? Is it perceived? Is it agreed? Is it standardized? That's me.
Yeah, good point. And Girish, from your knowledge in this world.
Yeah, the adverse media is kind of taken I think it's being sometimes used in the wrong way. Especially when Ronald just mentioned it. Yeah, that's the favorite thing. When people want to look at some things, they will just look at Google. But I think Google search is not the only search which one should do. Probably they have to do kind of a meta search. They have to go to different search engines, and probably they might have to, I know Google is a favorite, but then Google is not the ultimate search engine where we have to rely on for any of the news which we want to follow, because ultimately Google is a company. Due respect, I mean they're one of the biggest internet-based companies, but we in the financial industry, we have got to do something which is outside that. So what we need to educate our people that relying on one source is not the best source. We have to look at multiple, and we have to do deep dive into each of the customer's profile and understand what are you getting out of it. I mean, what information you're gathering. Check for the authenticity of that particular information which is being put. Because adverse media is something which is everybody loves to do it, and the first information which comes on the Google search, that is what they rely on, which is absolutely wrong.
Yeah, and I think one of the aspects there could be to add in some biometric AML stuff. My Vista is found, and they can decipher whether that's me or whether it's someone else, and then drill that down further. So if you've got some deep fake, to understand actually, no, that's dismiss that. So back to your point, Ronald, when you've got that plethora of adverse media that could be, let's say 90% fake news, could be.
Yes.
You could decide.
WhatsApp Academy.
Exactly. And other platforms, of course, on the BBC, so that conventional. The likes of so I suppose some of the questions then are about how extensive some of that data is and whether that's real time, and how important that is versus stored information to make that decision at that point. It seems like a very obvious question to me, but getting real-time information and understanding that is sometimes quite a challenge in getting that in. And whereas knowing that you've got the source of that data, or knowing that you've, I suppose the question really is how useful is a piece of information that's 6 years old versus something that's yesterday, and how do you know that it is or isn't, and making that decision based on that. And if you've come across any of those situations before, Girish, have you? You're coaching.
Yeah. So yes, the information actually well, looking at the new trends. I mean, looking at whether this information is an old information or a real-time information. That's another challenge which people face, because the news which gets updated often, maybe it may come and sit on a particular what do you call that? It may be circulated more often that people than the real ones. I mean, actually, so people may not look at whether the information is real-time information or whether it is about the way TikTok, the way WhatsApp, the way Instagram news are being spread these days. They will definitely not look at how old this news is, but they just want to spread this particular news. And that's actually creating a lot of impact on the current generation's mindset. They don't even want to go into deep to find out whether the news is authentic or not. That's where it's a fear factor for all of us.
Yeah, and understanding that, I mean, it kind of links into a bit of deep fake and biometric stuff as well. But, so let's probably just move slightly away from that particular subject. It's not directly on AML, but over to you, really, I suppose, Ronald. Just from your experience in the financial sector, I wonder if you could sort of give a whistle tour kind of guide. What would be the sort of, I don't know whether you want to do 10 or whether you want to do 5, but some kind of step to say, right, you must do this, you must do that, or this is the flow in which I would do AML compliance. Some of the important aspects. Sorry, put you on the spot, haven't I?
No. It's like, I think, have you guys got some time? We can have a proper conversation. But look, I think it's all about. So if you talk about AML compliance, if you look at it from front to back, there are 4 steps to AML compliance in the regime basis. The first one being prevent. That's you trying to sort of stop these things happening, trying to stop a dodgy person from being onboarded, KYC and whatnot. Detect, once they're on your books, what are they up to? What's the behavior? What their transactions look like? And then when you find something, reporting that. And that's, a lot of, there's real challenges around making quality reports. That is not just sort of saying, we did this, we found this transaction, context, detail. If they come into the branch, they actually provide this online. Is there a description you can provide? Are you able to serve up video later on and all those sort of things? And the last part is police. So the whole system is engineered on those 4 concepts. The police part, we all know, and this is the sort of critical element of how good is the AML CTF regime as a whole. The police part, we all know, needs to be staffed up. Law enforcement needs more legs, more teeth, more powers to do what they need to do. We're having some reasonably good success coming out of Australia here with the Australian Federal Police. Our regulator actually is quite an interesting one because they have a dual function. They're both a financial intelligence unit as well as the regulator. So you make your reports to them, they disseminate, they work it out, they share intelligence to partners locally and globally, and law enforcement locally and globally. So they sort of build that whole sort of whole process into it. The quality that you can introduce really is upfront. So I truly believe we make a difference. It's not massive if you look at the grand scheme of how much money is coming through, but it's required. If you look at the number of SMRs, so suspicious matter reports and so forth, that are put through on a yearly basis, the larger the institutions, the more mature they are at sort of producing those things, all the way down to smaller institutions that are good at doing those elements and working through that. But really, end to end, it's we can go into the sort of steps of what it is, but it's all around a good quality AML CTF program, people understanding what they're supposed to do within that, having the proper oversight over the top, and really understanding your risk, in many different areas. If you understand those things, great. What we're seeing now, and the very good thing, is that RegTech is underpinning and commoditizing all these things and making them easier to implement and understand. But you fundamentally have to be good at some of those things, and you've got to put capability in, people understanding. But commoditization through technology at the moment is really the way it's going, and it's really helping.
Yeah, I'd absolutely agree with that. It's bringing that, what we call the automation to it. The labor intensive parts of going to find and seek information, bringing that into one place in a very quick way is quite good. But I mean, you hit on some really good points there. And I suppose, Girish, one of the questions I want to ask you as a coach, and given the fact that in this space now, the requirements have not just been sat, or have been for many years, but are now not just sat with the financial world, they're sitting now with other, and we mentioned it before. Yeah, you can buy a, what did you say, a bath for $40,000 or something. I wish I could have a bath for $40,000, but there you go.
Yeah. And they're made out of like recycled mobile phone pieces, so it's stuff like that, and gold flocks. So that's the $40,000 going.
Yeah, it's coloured in gold. Perfect. So the question I put to you, Girish, as a coach, how do you make it aware the importance of compliance across other sectors and other organisations? What's your kind of approach in that?
That's a very important question, actually, you mentioned. And the question you said that how do you create an awareness across the organization? That's something which has been in training in learning and development industry for a very long time now. I've trained a lot of all the three line of defense, the first line, second line, and third line of defense. And basically, my larger number of audience are from the first line of defense, and they ask me a question: why compliance? Why do we need a compliance? So I look at it in two ways. I mean, if I have to answer this question, I would put it in two ways. The first is that the organization level, and then the training level. I mean, that's the individual level. Let me put it that way. The organization actually need to start, or rather to create an awareness, they need to actually build their capability among the staff. So the right staff need to be onboarded. I mean, when an organization appoints a particular staff, they need to actually appoint people who have got some kind of a knowledge in finance, knowledge in business, knowledge in law, and that aspects which actually builds in, because when we are learning, or when a student actually learns this in his university or in college, they would definitely have some kind of basic understanding of how the financial system works, and what they need to do, what they are expected to do in a financial industry. That would be one of the key aspects which a financial organization need to look at it. I'm talking about the organization level, and then I will tell you how you can build an awareness about it. Creating an environment where where there should be transparency, and the training actually need to be given importance by the organization. This should be the culture of compliance. It should be coming from the top, the tone from the top. So the culture of compliance needs to be driven by the senior management. And one of the aspects in the culture of compliance is sharing of information, and training also comes into a part of it. So coming down to the training part, so what does a training needs to be covered is to create an awareness. The compliance needs to be woven, okay, across the three lines of defense. I mean, everybody needs to understand, or everybody needs to be made rather they should make them feel that they are part of that compliance culture. So I normally in my class, I give an example of driving a car. Okay, and when you're driving an automatic car, okay, what are the three main things which a person uses? Okay, driving an automatic car, the three main things which a person uses is: one is the accelerator, second is the brake, and the third one is the steering. Of course, you just put it on the drive mode, and then these three things are you're controlling. So let me just tell you, how an organization works in this three fashion. So accelerator is like the first line of defense to move ahead in business, right? So if you don't have an accelerator, you cannot move. The car cannot move. So it needs an accelerator to move ahead. And that's what the first line of defense, to look at how the business grows, how we can generate profit, how we can get good customers, or customers for that matter. Forget about the good or bad. I mean, let's not talk about that. How you need to get customers, how you can build the organization's profitability. That is what the first line of defense's goal is. So acceleration is to move ahead. Then comes the second part. The most important part actually is the brakes. If you don't have the brakes, the accelerator is useless. Because if you remove the brake from the car, you will not be able to drive a car. Forget about a car, even you can't drive a cycle also if you remove the brake, because you will not be confident. So brakes play a very important role. That's the second line of defense. That's the compliance team. Now, the third thing is you have the accelerator, you have the brakes, but do you know where to go? Then you need the steering wheel. That's the direction. That's the third line of defense. That's the auditors will direct you whether you're reaching the goal or whether you're reaching somewhere else. So these three components actually play a very, very important role while you are while every organization needs to have that. Now, if these things are not there, then definitely it's like a simple driving of a car. An organization also will fail. This is something which I normally, and most of the time, I give this example to my target audience, and I tell them that this is the simplest way of life. And if you think that compliance is putting a brake to your business, absolutely right. We are putting brakes to your business, because if the brakes are removed, the car cannot move, or you don't have the guts to move your car. This is what I say. So this is an awareness which we need to create. And I always believe that giving live examples to a person actually touches the emotion of the person, and then they feel that why compliance is doing this. Why are they asking these relevant questions? Why do you think that they are asking these questions which you may want to go and ask these customers? Because you're safeguarding not only the interest of the customer, you're safeguarding the interest of the organizations, and most importantly, you're safeguarding yourself and your family. That is where the compliance come into picture, and that is what people in the front line needs to be aware about, that whenever a compliance team is asking you questions, they need to think that, yes, I'm doing it for a cause, I'm doing it for a good cause. And that's where the awareness needs to be built.
Well, if I could just add to Girish's point, in my terminology, the compliance team is not about stopping business from occurring. It's just the analogy, right?
Yes.
The compliance team is not the brakes of undertaking business, because that has been the traditional mindset for a lot of people to say, here come the compliance team, I can't do this and that. So, and that's also seen for a risk management function. Rather, the compliance team give you the interpreted view of how you need, your guide rails of how you need to move
Absolutely.
forward.
Yes.
And the guide rails in this example are around not driving too fast and staying within confines, right? But and that's a very important function, but not as a blocker, but a true modern compliance person should be along the lines of saying, okay, you need to fit within this. You want to say you want to do this in a higher risk appetite. The compliance team is really about saying, well, how can we enable this, or how can we actually make this happen? That's the sort of view. So I just want to add that 10 cents in. If anybody's listening, compliance does not mean stop.
Yes, absolutely. They allow you to go fast. Mark, I think we lost
two buttons. I've got two buttons from my mute. It catches me out every time. Sorry. What I was going to say was, when I first entered into this world of this dirty money world, let's just a preventive dirty money world, you kind of go, well, where does it start and stop? And I think it's very interesting to be able to explain to people. I mean, maybe you might want to use this, Girish, when you explain to an organization that's been outside of the need to do AML sanctions and PEPs or any other kind of governance around that, just to understand, what does it really mean? What does it mean?
Just to say, I think we can answer. Sorry, I'm interrupting here. Yep. Sorry about that, Mark. So this actually would answer to one of your earlier questions, whether compliance is going to be a tick in the box. Yeah. So if you tell the frontline team that they're doing it for a particular reason, they're doing it for a particular box, for a particular cause, definitely the concept of checking the box gets eliminated.
Exactly. Yeah, you're exactly right. Or at least if there is a box there, they're going to have to think before they tick that box, because
Absolutely,
it's a kind of a bit more of a deeper aspect of it. And it actually, before I tick that box, should I not do a couple of other checks first, and then I can tick the box? And I think that's what it comes down to, because the subject matter is quite deep. I mean, it's from the street upwards, and people don't often see this in a banking organization, and they see us here in, similar haircuts and same shirts, but we are. When you look at that sort of dirty money, there was an article that came out this morning, yesterday morning on City AM in London. What the MPs are saying, that actually is a cost of, get this, 350 billion a year of dirty money coming through London. Incredible. It's incredible. And they reckon it's going to cost organizations around 32 billion a year, because now that it's been spread out across other organizations to do this. So clearly, and most of that, 30% of that cost, is coming from non-automated manual processes that are doing that. So I think any tools that can help. So that sort of brings me on to the other question, and maybe Ron, you've got a view on this, of what do you think, or how do you think really that tools can be designed to make a seamless compliance, or do you think that it can or can't be improved? What do you think should be improved in that sense?
What we've seen is the emergence of RegTech solutions for different use cases along the whole end-to-end AML value chain. If you start that out from KYC as your life start, all the way through to some reg reporting and maybe even offboarding from that perspective. We've seen originally these large BMF systems that come on, and they encompass everything. And the banks are using them because they're expensive and all those sort of things. We are starting to see smaller systems that manage the front part of KYC, that have basically, because you've gone through that KYC process, they are on a basically recurring repeat view of continuous monitoring. It's somehow avoided. That's how having this massive end-to-end monster solution to have that. It's made accessible. I think it's a really important piece there. The whole world is not made up of loads and loads of banks. It's made up of fintechs. It's made up of small businesses. It's made up of all these sort of things where these solutions, if they're commoditized and accessible, they can use them. You see this in law practices in the countries where they have they're onboarding new clients, and there's a whole client onboarding practice. It's very different to how we do that in banking, for instance. And then when their transactions are not about money coming in the account, it's actually a matter that they take on, a legal matter, and where they assess that part and work through that component. It's a very different process, but it's commoditized and getting easier on that sort of end-to-end sort of perspective. Now, I think what we're starting to see now is that a good solution, if you are in the space to buy a good solution, or you can buy one off the shelf or otherwise, you're in a position where you should be able to effect changes to that easily. And that is, are you able to do that without having some technology expert or having to buy consulting services on the side of those things? A RegTech firm that is, a fintech firm, let's say they're a payment remitter. The payment remitter may have a heavy tech element within their business, so they can integrate those things, make changes, bolt on new things. Some regulations change in Australia. The driver's license, there were some changes that required the number on the back to be incorporated into the whole end-to-end process. Those firms, I think one of those firms adapted. I did a review of their compliance. They adapted that within one day because they can and because they have the capability. But that's not true for everyone. So that means that these solutions come along out of the box. There is stuff that's available and very applicable straight away. But it does require you to understand first what it does and how it applies to your business. And then secondly, you should be able to effect a change to that allows you then to tailor that for your business. Nobody wants to see cookie cut, or regulators want to see a cookie cut view from XYZ. Doesn't mean your business is so radically different that you have to spend ages and try to understand how those rules work and how they need to be implemented. But that really helps you get there. And those false positives, which are the outcomes of those changes, those solutions, name screening is a great example. You want to go through a part where you have a little sandbox or a sandpit where you can safely actually refine your rules, run the data through, check iteratively where you go, and work through that. And to take those learnings and then reapply them. Really good RegTech vendors where they're providing a lot of these solutions off the shelf are having account managers talking to their clients on a monthly basis and saying, this month we've noticed you've got this many hits. This month you've got this many. And they're helping the people buying these solutions from RegTech to actually help tune what that is. A really good RegTech firm gives you all of those value adds. And I think the last one is, let's say I'm in a position where I want to buy a RegTech solution. Some of those guys can help you realize a proof of concept really fast. And that's different again to those big monster solutions where implementation team had to come in, you have to pay $20,000 just to sort of have them come in and do a business analysis view and all these sort of things. So I think from that, the good vendors are really offering a way to be nimble and make it happen quickly. And, the whole cheesy term of the sort of agile approach to fail fast. You do this, it doesn't work, you fail it, you move on to the next thing. And that's the way it should be. Ability to affect change fast, easily, understand. Doesn't mean you do that and then you disappear. You still have to follow a governance process. You still have to say, how have you done this? How have you arrived at these decisions? What do they mean? And document what you're doing and how you do that. But these things make that easier.
Yeah, good point. Good point, Ronald. I think part of that, to add to that, is perhaps the speed as well. Making sure that this is not, we hear it all the time, particularly for banks and particularly from fintech solutions where they're onboarding people or companies. That process can take too long to the point where it's exhaustive and they lose the customer. Absolutely. What you were saying, Girish, about actually, do we stop put my hands up? Do we stop the sales? Do we stop the onboarding? And that's speed. And from that speed, I suppose the inclusion of AI or machine learning can really add to that. And I suppose a question maybe to you, Girish, is what do you think over the next few years with regards to machine learning? If you've got sort of futures hat on, what do you think that might look like? Or what do you think, bear in mind, we've still got quite a long way to go when it comes to that.
All right, Mark, I think to answer to this question, I think I should take the audience a couple of decades back, 20 years, 30 years back, while probably we were just kids and we were aspiring, or maybe some of us were thinking of getting our degrees or graduation hats on our head. So probably those days when computers were first introduced into the financial system, or rather the banks were first. Earlier, I believe, I'm not too sure about what is to happen in UK and in Australia, but in India, is to have those huge ledgers where people is to write the name and the account number and so on and so forth of the customers. And whenever the transaction is happening, is to write the details. And I remember, that was the phase when I joined the bank. Okay, I never worked on ledgers, but when I joined in a bank way back in the late 90s, 1990s, okay, so people actually felt that introducing of computer system into the financial system could take away many people's jobs. Okay, just the computers, which I'm talking about now, which you guys are talking now. So introduction of computers was a threat which was felt during those days, and they felt that now what are we going to do? We are going to write everything on the computer and that's going to work. Well, that is going to work, and that did work. Over a period of time, I saw that when ATMs were introduced, the tellers felt threat that okay, now my job is going to be is going to be taken over by this machine, which is going to be there in some mall or maybe in a corner of a building, okay, and people are going to withdraw money, and then what am I going to do about it? Okay, nothing happened. In fact, work increased. Then came internet banking. Transactions were done over the phone, over the internet. What happened? Nothing happened. If you look at these things, if you look back and look at these things, AI and machine learning, or rather the systems, I'm just calling up the technology which we are dependent on. It has increased more and more work to us, or rather it has increased or given us more and more opportunity rather than decreasing more the workload on us. Now that introduction of the systems, introduction of AI and machine learning which has actually greatly helped us. introducing of AI and technology into compliance system, this mundane task of repetitive task has been reduced. The staff who is doing the same old task, the fatigue factor which is going to creep in into him, that has reduced, and he's doing better things of managing the AI rather than getting controlled or threatened by AI. So if you ask me, machine learning and AI has actually increased the number of workload on people rather than thinking that there is a decrease in the workload. That's one factor which people might want to get this thing out of their head. It is the opportunities are more than maybe around 5 years or 3 years back. Okay. Second thing is that, yes, I agree. The number of threats, the number of frauds have increased because of, Ronald mentioned regarding deepfake. The number of crime rates have increased because the speed of transactions have increased. All that where we human beings can actually judge that, we need to find out whether this is different from the fraudulent transactions to the real transactions. That is our judgmental skills, which AI can never do it. AI can never judge. They take existing data and they can speeden up a particular transaction or speeden up a particular process. But judgmental skills, I don't think yet AI has actually been, with my limited knowledge, I can say that. So long story short, to answer to this question, actually, we have great potential in the future with the new technology coming in, and we should embrace this new technology. We should think that, yes, this is something which we have to look forward to, which is going to increase our work, or rather we get an opportunity to learn new things.
Yeah, just add 10 cents onto that. I don't believe, and there are lots of solutions available with AI available and connected to solutions and whatnot, but it's not as accessible as a lot of these white papers and things you read. It's just not. And accessibility is price point, ability to implement it, capability, and so forth. There's two versions I'm seeing of AI that I think are probably quite interesting. One of them is you are a large institution and you get a massive number of false positives. You put AI on the end to work through, to take away your triage element on there, or your first review cycle, to actually reduce that down to to bring it down. The other variation of that is I've seen some vendors, they basically say, I've got a potential match. I'll push it to another name screening service, bring it back. Still potential match, push it to a third one. But by going through there, you've only accumulated maybe $2 or $3 as opposed to $50 as soon as it hits someone's desk. So it's a very good way and it's more mechanical rules-based views. The second variation is that rather than the false positives occurring at the tail end, the AI is based and implemented within the tool itself. It's baked in to tell you that your rule is wrong or needs improvement. And I think that's really where the element is that's actually going to help you. The other application of that sort of thinking, which is baked in AI within your solution, not bolted on AI, baked in AI is really good for finding networks between different customers that you just could not possibly find. You can have 10 analytics people sitting there, if you're a large organization, to sit there and scan and look for patterns and so forth. And you won't get those insights unless you have something that's thinking three-dimensionally from that. And the AI elements is superior on that. That's also true on transaction monitoring, where you have to basically link up those transactions. There's no immediate view on how that's actually collected together. And that's that neural networking element behind there is actually, that's what's causing the connections. Like Girish is saying on human aspect, but it's just not scalable from that, from the human view. It then means that you move on to higher value tasks as well.
Yeah, absolutely. Very good point. I mean, not all of us can be global chess player champions, can we? So, and you probably need to be. So having that at your armory is good, and I like the points to that. I think having that that point around the machine learning and AML, it's a lot of people don't necessarily understand it. I mean, I don't know, we don't know the whole audience here. I can't see everyone, they can see us. But there are some people that when they hear about the AI and the ML, they get a little bit confused about exactly what it is. But it's around us in everything that we do, whatever, and it's not going away that way.
It's not going away.
And as it's around us in everything we do, don't forget the bad actors have also got applications that do exactly the same thing in reverse. So it's a question of being one step ahead. Yes.
Mark, just to add to what you said just now, you said it's all around us. The faster you, I mean, this is a message for everybody. The faster you embrace it, the faster you can actually merge with it. If you think that you are not going to embrace, you're going to isolate yourself from it, well, you will be isolated. You will be left alone.
Yeah, absolutely. And then who's doing the free thinking? I'm not sure. That's a whole philosophy question about that.
Yeah, true.
We probably all use ChatGPT for that purposes as well. But I don't know. Could ChatGPT write a AML strategy? Perhaps it could. We should try that. Perhaps it could. I don't know if anyone's done that thus far, but it doesn't take the broad length of the years of experience that we all have here. So yeah. I'm looking to see if there's any questions from the audience. I'm trying to see now. Just going to reach out to our host and see if she can hear us and whether there's any there. If not, I've got a couple of other questions that I think that were thrown in afterwards. They're kind of on topic to what we were talking about before. And let's just see if we can make sense of these. So financial institutions, are they taking a broad enough look at AML? That was a question that sort of come out previously from a viewer. We kind of touched on this a little bit, I think, and it kind of goes to my point when I said there's 350 billion of dirty money filtering its way through the UK. Do they take a broad enough look? What's your general view?
Look, no.
Right.
If you look at findings from regulators, it's coming back saying the organizations are still struggling understanding their ML and TF risks. And, it is understanding, as Girish said, with the 4 dimensions around your sort of, your risk assessment, but also to consider on top of that, what's the business environment providing as a risk? And then secondly, what is the environmental risk that's bringing in? What are the external environments that are sort of driving that change? Not just on your customer, but what else is happening to make that happen? And I think if I take one practical case that I can talk about quite well, and I've actually seen this with 3 of my clients. One has they strengthened their onboarding and KYC. They're a buy now, pay later firm, if we're all sort of familiar with those. They improved their onboarding process, and consequently their fraud went down considerably. And that was because one, they were trying to get more information around loan serviceability and therefore collecting more data points as their driving factor for improving their compliance. Consequently, they improved their KYC, and therefore they ended up with less people turning up and trying to commit fraud on there. And those are a very good example where a fintech has actually taken those things on through necessity and have realized that overall that's actually helped them. You've got to find that balance though.
Yeah, that's very interesting though, actually. I come across, you've got to give me a look about how and what I've been doing in this world. And it's mainly focused on the onboarding. But so you're onboarding a client, but actually perpetual checks seem to be the what does a perpetual check mean? How do I do it? What end? So
Sorry, Mark, we missed that first bit of your sentence. Beg your pardon.
Yeah, so the checking from the start to the finish. So when you're onboarding a client, but actually if a client is trying to, like you said, from buy now, pay later industry, particularly, if someone's coming to the fold initially, what should they do initially when they're trying to onboard someone? And there are tools out there today that check the IP. They will check whether the email has it ever been used, or did someone just make it up? Suddenly that's put a higher risk. Now, having them tools, like you mentioned before, baked into your service can just prevent that money cost. Because if you didn't have that tool, what happens further on down the line is you onboarded someone and they've committed a fraud. and it's happened during that process. So having them tools front to end, I think. I don't know if Girish, if you've come across any tools like that from Perpetual, or your thoughts Perpetual, and how often Perpetual checks should be done.
Yeah, so checks can be done often. Okay. Now, what normally happens in a financial institution is we do KYC during the time of onboarding of the customer at class over. This is what we believe. But yes, we know that there are three segments of customers. There are high risk, medium risk, and low risk customers. In case if it's a salary class customer, probably we may want to use this kind of an approach where we need not do an ongoing due diligence for these kind of customers. But if the customer is a business customer or maybe a cash intensive, then I don't think that there is kind of a periodicity which needs to be fixed. It can be done once in a month, it can be done once in 3 months, it can be done once in a year. That depends upon the risk appetite. And I think this periodicity has to be defined by the financial institution while they are having their customer base, because anytime the customer can turn rogue, anytime the customer can do some kind of a money laundering, terrorist financing activity. So it is very, very important for us to keep a watch on the customer's transactions. And how do we do it? Well, there are different technology which are coming in. The perpetual KYC is one of the things which is being kind of introduced in some of the financial institutions. Again, they say that it is not a silver bullet where it can solve everything, because that is one thing which the staff or the financial institution needs to understand, that applying a tool is not a silver bullet. It's not like a carpet or a blanket approval which is given that, oh, we have bought this particular system, now we are safe. Answer is no. We have to start looking at things in a different way. Yes, it is going to help us considerably, significantly. It will help us from these mundane transactions, but we have to still apply our due diligence, our thoughtfulness, our skill sets of applying that is very much required.
So you're kind of answering a question that I just popped up on my radar from the audience. It kind of answers that, really, because you're sort of putting it down there. Thank you, Christopher. So if you can read that, what is the key metric that would measure AML program effectiveness? Quite a good question, that. If we can answer that, then perhaps we'll make
it's a great question, Christopher. So a tricky one as well, right? So look, my role, as well as I do projects as well as FinCrime consulting. So on that side of things, a lot of people ask me about what they can do better when it comes to, in Australia, the AML Compliance Office, the AML Co or MLRO. MLRO report is a really interesting one. What are the metrics that you include that give you a state of what the current performance of the AML CTF program is? Some of it's data driven, it's qualitative, some of it, and some of it's quantitative. So what's your backlog on alerts look like? How many transaction alerts have you closed? How many are open? How many new customers have you on board that have gone through KYC? How many name screen alerts have you got? Then you can start to go more on the qualitative side of things. What do your suppliers look like? What are you onboarding from that? Do they pose a risk on that? Then you start adding your sanction elements onto the side of that. Staff, how many staff have abstained from training and so forth. Collectively, they give you a view of what your current state of AML CTF performance is. And the key here is you don't have to do that every 5 minutes or every month or whatnot, even if you do quarterly. The idea is that you need to stack them together to sort of say, what am I getting out of that? And more importantly, that's the sort of oversight that the board needs to understand and actually come back and sort of say, do we need to do anything about this? Is this a problem? Are we trending in the wrong or right direction? I hope that it's a collection of many things, but to effectively form a cube of data with that. And that's what you want to report on a systemic view.
Girish, have you got
Yeah, I think Ronald mentioned it beautifully. There's no one one metric which we can just focus on. There's nothing like that, because we have different segments of customers using different products from different jurisdiction, different geographical locations, different type of products, delivery channels they may be using. Now, looking at this broad aspect, you can't have one solution for everything, or rather, you focus on one thing that everything gets into place. I don't think that will work. So, what is a key metric that would measure AML's program effective? Like collectively, if all these things work, proper onboarding, proper transaction monitoring, screening, sanction screening, and the transaction screening, which is done properly. Even when you're offboarding a particular customer, you have to do a proper offboarding of a customer. I mean, that also is required. So everything has plays its very, very, very important role for every. It's like a player. You know, when in a football field, you can't ask which player is important. Every player is important. Okay, so that's how we need to consider for an effective program.
Very good. Very good. I usually use the terminology as like a clock. There's you could have one cog in the clock, but you wouldn't tell you the time.
Yeah,
You need many. You need many in there, and they're all as important as each other. So,
all are important. Yes, exactly.
all are important. I mean, it'd be interesting. Maybe some of the banks might consider that their lack of fines might be a key measure that they would have, but that's a gauntlet question, really. So we've come to the end of this wonderful session. It's been an absolute pleasure and a delight talking to both of you. Your information has been invaluable, and I thank you very much. I don't know if you want any final words to say or anything else. Anything over to you, Ronald? Do you want to add anything to?
Yeah, look, just one statement. Fighting fin crime, keep up the fight, keep going. It's those days when you've got too many alerts that you've got to work through and you're working late and you can't get through it. You're wondering why. There's a reason, and just keep going. You are making a difference.
Very good. And Girish, from a coach's point of view,
yeah, my statement is clear. I think what one should do is keep learning, and talk to people, connect with people, and learn from each other. Sharing of information, sharing of knowledge is very, very important. So compliance, if someone says that he's an expert in compliance, he does not know that compliance starts with K or with C. So he should know that compliance, nobody can be an expert in compliance. So learn, and learn.
Yeah.
Oh, can I just Mark, sorry. I'm going to call him out on this. I have a colleague of mine, a very good colleague of mine. His name's Joe McDavitt. And his text message to me was, compliance is objective, risk is subjective, people tick boxes to protect themselves. I think that's a really good statement.
Very good statement, yes.
Very good statement. Yeah, that's very good. We could probably end on that note. I'm just going to add the word expert in, because I learned this many years ago when always trying to learn and be the best at everything. So an X is a has-been and a spurt is a drip under pressure. So, there is no expert because it's always growing.
There's no expert, yes.
So, well, thank you very much, guys. It's been an absolute pleasure, and we'll see you on the other side.
Bye-bye.
Thank you.
Thank you very much. Thanks, everybody.
Leave studio.